Vodacom is majority owned by Vodafone, one of the world's largest mobile companies. Vodacom has operations in South Africa, Tanzania, the DRC, Lesotho and Mozambique. Vodacom has a market cap of 140 billion rand, a price to earnings ratio of 13 and a dividend yield of 7.6%. Looking at Vodacom in relation to our discussion on MTN, your thoughts on Vodacom?
Yeah, I like that company too. Obviously, it doesn't have the same kind of global operations and all of that. Doesn't have the number of subscribers and all that sort of upside. But it's a very well-run company. It's got a great market, the preeminent position here in South Africa. So they lead in terms of data sales and data dongles and all that stuff. They have a moderately good business in Mozambique, Tanzania, and they've got a business in the DRC, which for some reason they've always battled with. The reason they can't go anywhere else is because their 65% shareholder Vodafone, the British and global companies, their deal is that this is the area that they can operate in. But as far as it goes, that's a good business, good place to be. And I think people call this thing around market maturity far too early. You know, I've been hearing that the South African market is mature for the last, 6 years. And every year the earnings grow and the sales grow. So I don't know what kind of mature market that is.
Peter, looking at Vodacom, it slashed its international roaming rates to the UK earlier today. Your thoughts on the type of market it is playing in the UK? We know how expensive those roaming rates can get.
Look, yes, roaming has always been an issue, not only in South Africa, so many of these other countries. You pay quite a fortune, particularly on data. So that's what they're trying to address. But I think some of that is to come back to Paul's point, I think for me, the issue with Vodacom now is there has been a change in the market that we've never seen before. Pricing in South Africa has started to come down. This hasn't happened really before. So yeah, I think we're getting to that stage where, you know, getting growth out of the South African market could become much more difficult than it has been before.
Looking at Peter Ace, he'll be stepping down next year. Your thoughts on how he drove Vodacom to where it's at the moment?
Yeah, it's interesting. I like Peter a lot. I mean, that company, Alan Notcraig, who's now the Cell C boss, as you know, was there for a long, long time. Peter Ace was his 2IC, and then when he left, he took over. So Peter is still young, but he decided, you know, enough's enough at that level. And Shamil Jusub, who is a South African, was previously with Vodacom, went into Vodafone elsewhere and is now coming back.
He's been there for a while.
Yeah, I don't think that's a big problem. I mean, as a well-established exec and, you know, succession happens, these people come and go. That's not the end of the world. I think the company is so well positioned it could be run by a donkey and it would still be a good one to invest in. Having said that, I think Peter's making some interesting points here. Because as we said earlier, there's some markets which are very price dominated. South Africa traditionally not. So the rates were high, and so that's why people would buy 2 SIM cards and change them in the phone in order to get a cheap call. But it's beginning to crack a little bit, and not the least because of the old man, Notcraig, who's starting to take shots from Cell C.
Indeed. Alan Notcraig, should Vodacom be actually worried with what Alan Notcraig is doing at Cell C at the moment?
Yeah, definitely. I think you'll see that in the way Vodacom has responded to the whole thing. They haven't really taken time to do that. They've been very quick. Whenever it comes up with another shot, they also come out to fire their own shot. So I think they need to do so. My view is that they probably need to do so for the longer term, because what you don't want to do is to allow the smaller operator to gain scale. Telecoms is a business of scale. Once you have given them that, it will be very difficult to fight them.
Let's look at the share price. Paul, up 5 years, up almost to 60%.
Yeah, so remember Vodacom only listed not so long ago in sort of 09-10 when they were unbundled from Telkom and the whole change of shareholdership happened with Vodafone. For a while it didn't really do anything, and suddenly it became apparent to the market what the dividend yield of this thing was going to be. And the fact, as I said, that it wasn't mature and that smartphones were getting cheaper and cheaper and more people taking data bundles and how the revenue could come through from that. It falls off a little bit there, but to be fair, at the end, so have a lot of stocks had a little bit of a rough couple of weeks.
Yeah, indeed.
It also went ex-div, you know, by some huge amount, early on in the month or so ago. So I don't know, around here, I guess people are wondering and they're taking a little bit of a wait-and-see attitude towards these pricing issues. But I don't know. I mean, what I hear in the market is that Cell C have one shot at this because they've been spending such a lot on marketing and they've cut, revenues as a result of specials, that they will either gain market share or just about go insolvent within the next 3 to 6 months. I don't know. We're going to wait and see which of those two happens.
So wait and see attitude here on Vodacom. Hot or not for you, Peter?
I would probably say not at this stage.
I still think it's one of those kind of long-term secular buy stories. So there'll be short-term movements and what, but for me anyway, it's a great company with a great market position, millions and millions of customers, and I still think this industry is going to transform the way we live because the 4G thing is coming, and at that point, a fixed line and all the ADSL become totally redundant. So hot with this one.